Small business is about courage, risk-taking, independence, and we small business owners are survivors. Everybody has an idea for a business, but how do you take that idea from mind to market? This is the place to learn.
Small Business School with Hattie Bryant.
It's a new kind of school. Together we'll learn about business from the inside out, from the people who've done it. We'll meet the men and women who are today's pioneers and quiet heroes. Their lives are the textbooks. Our classroom is the world. Hi, I'm Hattie Bryant. We all ask the question, what will my legacy be? What has been the meaning and value of my life? There are over 25 million small business owners in the USA, and all of our companies together represent over $47 trillion of net worth. For most of us, that business is a very important part of our legacy. Most of us ask, could the business live on without me? And we all ask, how can I get my money out of my business? Today, we're going to look at exit strategies and equity. We'll look at 8 ways to get your money out of your business and at the same time leave the essential values in. That's called an exit strategy, and we know most of you do not have one, and we also know that we all need one. The moment any of us start a business, we should begin asking, how am I going to get out of this business? And succession planning is a key to your overall success. So let's look at a range of possibilities and how each might benefit you and your employees the most. We believe there are 8 possible roads to travel. Most of you will take the first road, although we hope that you'll choose one of the last 3. So we'll be moving quickly down the first 5 roads, and you need to know that all this information is on our website. If you go there now, you could follow along. Here are your 8 choices. Number 1, close it down, liquidate. Work as long as you're able, then you or your survivors get whatever you can for the physical assets. The results are that you get the least and the company dies with you. There is only the legacy of memories. Just around the corner from this L stop in a North Side Chicago neighborhood, Johnson Funeral Home does it every day. Taking care of the dead, and more important, the living. The founder, Joseph Johnson, has been in the funeral business since 1936.
As I've built a business here, it's reasonably commendable. But what I do in business is not as important as what I do for others. And this is my philosophy. Sympathetic, courteous, and efficient service. I give it.
Mr. Johnson kept working until he died at the age of 101, and we're sorry to say his business died too. Coastal New England is a watery place. From Boston Harbor to Long Island to Block Island, then inland to Providence, you'll find lots of water and lots of Ray DeSanto's work.
We're standing in front of the Providence River and the Port of Providence. Providence River goes out to the Narragansett Bay and then further on to the ocean. There's a lot of shipping, oil, wood. It's an industrial port.
Ray's company is Harbor Marine, and he and his crew of 40 do whatever needs to be done on the water.
We're dredging a channel all the way up to the Crawford Street Bridge because we've already dredged on the other side of the Crawford Street Bridge all the way up to Francis Street.
What haven't you told me about this business?
I haven't told you that it's very, very rewarding, especially in the marine business.
Mm-hmm.
You can walk around and you can clear your head. It's not like being in some building 5 days a week. I just wouldn't be able to do that. Couldn't handle it. Isn't it great?
Ray died suddenly, and with no succession plan in place, the company closed its doors. If you decide to ride down your business and die with your boots on, that's fine. You made the decision. You didn't look in the mirror and see yourself over 70 years old and out of steam. Number 2, give it away. Transfer ownership to people in the family or a key employee. It happens all the time.
She's the world's greatest salesperson.
She's a legend in her own time.
Who is she? She's Ebby Halliday, but everyone in Dallas already knows that.
You're going to open that and show it to us and be proud.
Since 1945, she's been selling people in Dallas houses, and she's still in the office every day. This may be the largest privately held real estate company in the country, reaching its all-time best this year by moving 17,500 families into homes and ringing up over $3 billion in sales.
And I just read that you've given 49% of your stock to the employees. Why would anybody do that? I mean, why don't you just take a big fat check from some outside investor and walk away?
I didn't want to do that. I felt an obligation to the people who have helped build this business.
You've wrestled with this decision, and it was clear to you that it was the employees who built this business.
Well, there was never any doubt that I didn't want anybody else to have our business.
Number 3, sell to someone very close to you.
So when should someone have an exit strategy?
Well, everyone should have an exit strategy. I mean, after all, we're all going to exit, right?
Jim Shell tells how he sold to key employees.
Say that the seller sells the future, the buyer buys the past. So you want to try and make a case for the fact that, oh, if we only had such and such here, the business could go somewhere. And so the role there was for me to try and make a case for the fact that the business had all this potential so that the buyer would say, oh, wow, all I have to do is throw this at the business and it's off and running.
Let's talk about how you sold that business. It's at $2.5 million, it's retail, it's wholesale, it's in the sporting goods arena. How did you do it?
Well, because of the second business, I'd been kind of phasing out for a couple years, so customers, employees didn't even notice. And the buyers, the 2 key employees, I gave them the sweetest deal I could because I trusted them and they were friends, and it worked out for both of us. And today they're a very healthy $6 million company, and everybody lived happily ever after. I took 10% down, and I think I gave them like 10 years to pay it off because I knew it was going to work, and they were good people, and they paid it off in 3 years, I think. So, which incidentally is kind of a rule of thumb. If you can't buy a business and pay it off in 3 to 5 years, maybe you're buying the wrong business.
This is a 21st century blacksmith shop.
Tell me, what do you do here at Quality Bending?
Well, basically we fabricate custom fasteners to a particular engineered design.
Russ, do you really think this guy can run this business?
I'm convinced he can now.
In 1960, Russ Seeley started Quality Bending and Threading, and in 1990, he happily sold the company to his son, Matt.
So some advice to other sons or daughters who are getting into their parents' businesses. Use some outside help?
Definitely. Definitely. And I would say, really, I think one of the things that my dad and I did right, and we didn't even know we were doing it at the time, is the CPA was a long-time contact. In fact, it's my uncle. It's my dad's brother-in-law. And they were a long-time partners in the sense that he has always been the CPA for this business.
So he knew that this CPA knew this place inside and out.
Right. And then I chose somebody that I felt comfortable with. So we both felt like we were being represented, and even though we're father and son, there are some issues that become pretty touchy when you're talking about, you know, someone's life's work and a large amount of money and the transferring of that. And I think it's good for each side to have a little independent counsel where the counselors can talk to each other and represent the, you know, misgivings or any of the fears that that party may have.
Number 4, sell to someone like you.
I ran a blind ad in the Wall Street Journal.
Peter Schink sold his advertising agency to a colleague in his industry.
So we ended up with 72 qualified people who were prepared to buy, who said they were prepared to buy the business.
Wow. So did they send you a letter?
Sent a letter. We asked for a letter and for just, kind of basic background that would make them eligible to do, to buy a business of our sort.
Right. Okay. So what was your first way to cut the 72 down? What did you go from 72 to, and how did you make
members of a marvelous trade organization, National Trade Group, American Association of Advertising Agencies, which did a great job of counseling any number of agencies throughout, the previous decades previous to ours. So they had a lot of staff experience in this. And it just happened that their regional guy was visiting our offices at the time I had this stack of 72. And I said, would you do me a favor, take an hour, go in and, take a cup of coffee, go through these letters, and tell me if you see any that you believe are really home runs, people that you know in the industry who you feel have both the means, the inclination, and the chemistry to be a match here. So he did exactly that. Came out after an hour, there were 4 letters left on the desk. He said, any of those 4. Then we brought our CFO into it, and we had an accountant, our CFO, our attorney, and the 2 owners, and that was the 5-person team that did the deal all the way through.
Lorraine Miller sold her business, Cactus and Tropicals, to another plant lover.
Having realized that I needed some professional help in selling it, I found the ideal person. This was a man that I had met when I was on the board of the Chamber of Commerce, and he had been president of the board, and he had been president of one of the banks in Utah. And I bumped into him and said, Brad, I've been thinking about selling my business, and I've had a lot of interest in it, and would you help me? And so he took my financials, and first week he called me up and he said, this is a really cool little business. My wife and I might want to buy it. And then he called me back and he said, if you don't mind, I'm going to send your financials up to this fellow. He buys and sells a lot of businesses, and I want to have him look at it and help me put a good evaluation to it.
Okay.
And he said, and also, I have a friend that sold his business about a year ago, and he's looking for a new business to buy. So I've been talking to him too. And so all of a sudden it seemed, ooh, this is fun,
Yeah.
There's all kind of options here. And so he sent my financials up to this fellow named Mark, and Mark called him back the next day and said, I got the financials, so I jumped in my car and drove down and looked at the business, and I want that business.
Number 5, sell to the best bidder. There are 3 groups who could be interested. One is business brokers and agents. That's much like real estate and selling your home. Another is the venture capital market, and the other is the angel market.
I wasn't thinking about retiring. I thought, I'll work for maybe another 10 years. And got a phone call.
I was running, and it was time to figure out, how do I get off this treadmill? And there were different ways.
Bob Orenstein and Tracy Myers both used a broker and both sold to publicly traded companies. Tracy showed us where in 1981 she opened her business, the Advertising Arts College. It offered curriculum designed to prepare students for a career in advertising. The school grew, and in 2000 she sold to the Art Institute, a growing enterprise traded on the NASDAQ.
I think I was in shock at first. I kind of thought someday it would be nice to be able to sell the school. I mean, everybody thinks about an exit strategy. Do I have one? Do I need one? Is there someone to pass this to?
The first thing I'd like you to do is I'd like you to just pick up this glass, swirl it a little bit, and try to smell the aroma.
In 1983, Bob Orenstein started International Wine Accessories in the spare bedroom of his condominium.
But remember, this is functional also.
Bob grew the business to over $20 million in sales, and in 2000, he sold to the $5 billion conglomerate, the Foster's Group. After the sale, he promised to stay on as president for 3 years.
How did you, A, come up with the valuation, and then B, come up with a prospect list that you would pitch?
The valuation is based upon that you do all the financials going back 5 years, you project 5 years forward,
And then it was Larry Starks and Geneva Company. It was their responsibility to go in and make an evaluation.
Larry Starks met us at IWA.
And very simply, it's contingent on a company's cash flow. And this is a very much a financial model, the one I'm talking about now. But I look at discounted cash flow. I look at what I call market multiples. Those are, from a simple perspective, someone may know of a price-earnings ratio, and it's a similar kind of approach, but applied to private company valuation. And then the last thing you'd look at is the value of the assets of the business. Not their book value, but their fair market value. And in Bob's case, a unique asset he had is an intangible asset that really had strong value, and that's his customer list.
What else is coming down?
You know, someone could rent Bob's mailing list, and it only has this much value. But the ownership of the mailing list, in combination with the people he has in the International Wine Accessories brand, and you know, it is a brand. It's something people have come to trust over many, many years of looking at their catalog, understanding the products they carry, understanding it's a reliable source for high-quality, top-line products. That's really what adds value. It's the combination of those intangibles. But the person making the buying decision, deciding what to pay for a company, is a CFO. And he's looking at the bottom line more often than not. Not always, but more often than not.
How do we build something that somebody else wants to buy?
Well, the first thing you have to do is you have to have solid financial numbers that somebody can check and rely upon. A lot of small businesses put all their effort into growing the sales, growing the organization, investing in the future, but they don't invest in the accounting. We had everything on a trajectory that looked like you could project right into the future.
Now, these last 3 roads are the least understood and the reason we're doing this episode. Number 6, sell to your employees.
So tell me about where we are.
This is a little bit of paradise, La Jolla Cove.
It is gorgeous today.
Dr. Ray Smiler is president of the Beister Institute, and he's an expert on ESOPs.
An employee stock ownership program is a way to get employees engaged and involved in the company so they think and act like owners, but also a way for the owner to sell the company in a very effective way so he or she gets liquid as effectively as possible. So it helps the founder, the original owner of the company, and if it's done right, it helps the employees succeed as well.
ESOPs are a fabulous vehicle.
We do have a stock option plan that we reward people very generously with stock options right off the bat.
Your employees are what carry you on.
The ownership is what will entice people to come.
Founders get things rolling, but employees are the people that really are the implementers.
To be able to offer a part of the company and part of the ownership of the company is a very significant attractor to good quality personnel.
What are the reasons that motivate an entrepreneur, a founder, to want to set up an ESOP so his employees can buy the company from him or her? And the reasons may be 3 or 4 key ones, Hattie. One is because you think it's the right thing to do, because people who build the company should own it, and you want them to have some ownership stake in it. That's one reason. Second, it may be to prevent the company from disappearing. Because if the owner wants to sell the company on the open market and a large company comes in to buy it, the company in effect may disappear, gets a different name, it gets subsumed into the larger firm. Or the company may actually be shut down where a competitor buys it and closes it. So you may want to prevent the company from disappearing. A third reason may be the owner sees this as an effective way to get liquid, to get money out of the company that he or she has built. And to get liquid, there are some terrific tax advantages that benefit the owner. So you can get liquid, you can prevent it from disappearing, and you can help give the company to the people who helped build it.
Number 7, sell it over time to the general public through one of the direct public offering instruments.
The people of Blue Whale Movers really move on the job. And that's one of the reasons this Austin, Texas company has been so successful. When the owners wanted to grow the business, they needed additional money, and they raised it through a small corporate offering registration.
It costs them
Stockbroker David Porter helped them.
The company needs a very well-defined, thought-out business plan that will enable people to look at the company and be willing to put money aside for 4 years, 5 years, 2 years, whatever it turns out to be, while they're waiting for that company to effectively employ their money. And that's generally the way it works. Generally, people are patient, and their reward comes at the end of some period of time.
All right.
Right.
But with a score offering, the individual who bought into my business is going to hold on to those shares until they find someone to buy it from them.
Well, there are several reasons that they want to do that, not the least of which is a tax reason. If you purchase most of these small corporate offerings, the majority will qualify under Section 1202 of the tax code, which means that if you hold them for 5 years or more, whenever you sell them, you get to exclude 50% of the capital gain from taxation.
Oh my gosh.
The other
So that's
side,
a good reason to buy a score.
That's one good reason to buy a score. Another reason is that the company may qualify under Sections 1244 or 1245, which say that if you sell that stock and make an equal investment in another qualified company, you at least defer that tax. You don't pay the tax on it right now. Additionally, you have the ability, if things really go badly for the company, that you may be able to write the entire investment off as a direct write-off against your taxes rather than have to take it as a capital loss.
All right, so give us some sort of wonderful close, your philosophy about why small business deserves our investment.
Small business deserves your investment because it has the potential of making you more money with tax advantages that are not available in large companies.
Number 8, sell it over time into private equity capital markets. This is the new business revolution that is opening up small business investments, making us attractive for qualified investors, yet the general public is not excluded. There are now many secondary markets where your sold stock will be valued and can be resold. You can be taking your equity out slowly over a period of time and not have the pressure groups, particularly the venture capitalists or the angels, poking around in your day-to-day business. Upon your final exit, your business is in the hands of management and owned by a diverse public. It's a public offering without doing an IPO or a DPO. This is huge. It's important. So we'll spend a little more time examining the private equity market. This is one of the beginning points for creating substantial wealth.
And so the message here is that wealth is made through transactions in equity.
Steve Watkins, founder of Intrex, speaks to the Boston CEO Club about what he calls the fourth market.
It's that company value is a function of exposure, it's a function of credibility, and in the end, it's a function of the liquidity options that the buyers have for your companies. So let's talk about those liquidity options. You've obviously got the public market, you've got the New York Stock Exchange, you've got NASDAQ, you've got American Stock Exchange. And in the private marketplace, what we're trying to create here is a fourth market. It's a market for the public trading of private shareholder interests. So what we've done is we've gone out and we've worked with an SEC-sanctioned exchange to really create a reporting infrastructure and then a trading infrastructure that's supported for the shareholders' interests of these companies. All right? So we call that the fourth market. It's a public market for private company shareholders. But by creating this mechanism that allows the private companies to report through this informational platform, and by working together with a SEC-sanctioned exchange that can now get your symbol and your company knowledge out across the investment marketplace, it allows the investment community to work through their broker-dealer to learn about these private companies that have publicly tradable shareholder interests. Yeah, and my job is to try to bridge that arbitrage gap between the multiples of private companies, multiples of public companies. Fundamentals still have to be the same. It's not a miracle, right? But it's by putting the effort behind that that we can end up really providing some exposure, credibility, and liquidity for your company. And our intent is to do that through this fourth marketplace.
Right now, we are in the midst of the largest intergenerational transfer of wealth at any time in world history.
I used to tell my mom and dad when I was a little kid that one day I would run quality bending and threading.
Know where your limitations are and look into the future, because you can't take it with you. Just like you can't take money with you, you can't take your business with you. There's got to be a beginning and an end. And it's much better if you determine where the end is.
You build it from nothing, You ran it for 20 years, and you passed it on so it could grow and be better and bigger.
Which one of these 8 ways will you use to get your money out of your business and at the same time leave the essential values in? What will your legacy be?
Small Business School with Hattie Bryant.
If you want to learn more about starting, running, and growing a business, come to our website, smallbusinessschool.org. There's streaming video and interactive study guides.
The only way we can compete with big business is to be faster, smarter, and better. We are the engine of the American economy. We create the jobs. Small business is about big commitment. It's about sacrifice and struggle. But we do it because we say, if I don't do this, my life won't be complete.